What's up, everyone? It's been a while since I've made a video. Me and my wife just moved into a new home and I've been doing a lot of remodeling. This is actually my new, studio slash office now. And nonetheless, it's been super busy, but I want to get back to making YouTube videos and doing more in-depth analysis on stocks to help others make, better financial decisions. Anyway, with that being said, in this video, I'm going to talk about whether or not Adobe stock is a good buying opportunity. Now, in my opinion, this stock has been beaten down for no reason, really. I mean, it is down, I think, nearly like 50–60% from its highs. The company keeps beating estimates and keeps growing revenue. It's trading at some of the lowest PE ratios it's ever traded at, but we're going to go over all that in this video, so make sure you stay tuned. And if you like content like this, please like this video and subscribe to the channel. And other than that, let's jump right into it. All right, so before I jump into the fundamentals and we go over some of the PE ratios, I just want to look at the technicals of the company, right? And you can see here, I currently have the weekly chart pulled up. This is going, way back to like 2014. Where this trend line is that I have drawn. And you can see that we're kind of bouncing off it right now, or we're on it, right? And when it comes to the technicals, obviously this chart is pretty bearish, right? We've been in a downtrend here for quite a while now, but I do feel that this is probably about to reverse sooner rather than later. And, again, we kind of have this, push up here, and then we bounce off, and then we come back up, and it almost feels like we're going to keep, trading within this channel until we kind of spring up, closer to this area before I feel we'll break to the upside, and this is just based off the technicals, has nothing to do with the fundamentals of the company or any of that. But again, back to what I was saying, I mean, look where this company's trading right now. I mean, back in 2022, you could have bought it for around this price. And then the last time besides that, I mean, we're back in 2020, almost 5 years ago. I mean, it's crazy. And when we go into the fundamentals, you'll see that the company's only been growing. And so for it to be trading at such low multiples, and such a low valuation right now, it's kind of mind-blowing. And, let me touch on that real quick, right? So one of the reasons for this is because there's just a bunch of fear that AI is going to hurt Adobe rather than help Adobe, right? So for most companies, AI is boosting revenues, but with this story, right, just Wall Street and all these analysts and investors are just pretty much, beating this stock up because they feel that it's at high risk, right? Now, with that being said, Adobe just had earnings the other day. They beat revenue, they beat their EPS, and they raised their fiscal year guidance. Anytime you see a company typically raise their guidance for the future, the company will just skyrocket after hours. I mean, and in this scenario, Adobe did. I mean, it went up like 7% and then it dropped down to like negative the next day. And so to me, it just doesn't make any sense. I mean, you crush earnings, you raise guidance, you do everything that investors want, and they're still just skeptical, right? And this is why I think it's just such a good buying opportunity, because it's just a matter of time before, they realize like, oh my God, like Adobe's not dead, right? Like they're going to make it through. And, we look at some of the, fundamentals of the company. I mean, they're not going anywhere anytime soon. So, let's go ahead and jump into that. All right, so here I have their total revenues pulled up, right? We're just going to go through these fairly quickly just to give you guys like an idea of where I'm coming from, right? I mean, look at the revenues, the total revenues, they just keep growing year over year. Obviously, you've had some little dips here, but when you look at the overall trend, I mean, straight up. I mean, this is a beautiful chart, right? Let's look at what's arguably even more important, right? And that's the net income. So this is what they're actually taking home after all their sales, right? And again, I mean, you're just seeing a steady increase. I mean, this could be a little cleaner. There are, these peaks and then valleys and peaks and valleys, and it's kind of like up and down, it feels. But again, overall, we're seeing a steady increase in their net income, right? And that's what we want to see. And then we go to free cash flow. I mean, this is where the company is like a juggernaut. I mean, just amazing free cash flows. Their balance sheet looks immaculate. I mean, their income statement looks great. I mean, everything about this company just really, it's just a solid company just growing steadily, right? And then we go into the net profit margins, right? I mean, they're making, out of all their services, right, they're making 30% profit margins, right? And we can see that this also dipped, and this has also been, kind of on an upward trend. We peaked here at 40, came back down. Now it looks like we're, attempting to reach back up there. But again, regardless, not bad net profit margins. And what we really want to see is that this has really just been increasing, right, for the most part since 2014-ish. So that's positive. Looking at the PE ratio, this is the PE ratio that we're trading at with today's valuation, right? So 21. That close to, I guess, what a market average is, but typically a company like this, which would be comparable to like a Microsoft or a Salesforce or Google, like a SaaS company. They trade at a higher PE ratio usually. And you can see from this chart here, like we're trading at the lowest PE ratio that we've traded at in a really long time. I mean, 21, you can see based off this chart, which is going back to 2016, right? That's 10 years almost. This is the lowest or the cheapest valuation that you've been able to buy the stock at since then, right? Which is mind-blowing because at the same time, the company has just been increasing revenue and increasing profit margins and increasing this and that. Oh, and I wanted to touch on something, again, going back to their recent earnings report. They did come out and say pretty much that, hey, look, AI is starting to pay off. Like, we're seeing our investment in AI increase our sales, right? And this is, again, one of the biggest things that are kind of pushing investors back and they're skeptical about because they feel like AI is going to kill Adobe instead of help it, right? And in my opinion, I don't think, I do think there's going to be a ton of competition in this space, but I just feel like Adobe's too big. They have too much free cash on hand to, buy out another company or to invest in whatever they need to invest in to be successful, right? I mean, they're a huge company compared to these, little companies that are going to, compete and try to take some market share, and they can take some market share, but as long as Adobe keeps growing at, 10 to 12%, which they've been growing at for, God knows how long now, it's still a good company to invest in at these evaluations, right? All right, so going back to the PE ratios, right? We're going to look at the forward PE ratio, right? This is where it gets even juicier. We're trading at a 15, all right? So this is pretty much saying based off of what analysts feel the EPS is going to be trading at, in the future, a year, 2 years out, this stock right now is trading at a 15 multiple. I mean, this is crazy, right? So think about this. Wrap your head around this. You can see on this chart, right, that we typically trade around, let's say a 30, right? But let's just be generous where, we kind of peak, or not peak, but, bottomed at like 25, right? Like a bunch of times. So let's say a 25 PE ratio, I think is reasonable. But wrap your head around this, right? Let's just say, that investors' skepticism on this company changed and the story changed. And I mean, if this company just started trading at PE ratios that it's traded at in the past, right? The stock price could almost double. Think about that. I mean, the fundamentals, the company would not have to grow revenues, wouldn't have to do anything. And the company could double in its value, based off the stock price that it's trading at right now, if it just traded at a higher PE ratio, right? Which, for that to happen, investors would have to be like, wow, the future for Adobe looks great, right? And they're not seeing it yet. But I think a prime example of this, right? A prime example of this same type of scenario playing out is with, let's pull it up, is with Google, right? I mean, take a look at this. Google was, wow, look at this. Google was doing the same thing though. I mean, it was in this slump, back here in 2022, kind of, like Adobe was as well. And then, we did rip up and then it was kind of in a slump again and slump. And now look at this though, right? It's like the market came to realization of the company and they're like, oh, wait a minute. This is a really good company and it's trading at way too low valuations because again, right now we're trading at a 30 and it was just, not long ago, this company was trading at like an 18 price to earnings ratio. Right? Look at this. This stock from the low here of 150, we're at 250. We're reaching close to double on this again. And it really just comes down to investors being like, wow, okay, this company is going to continue to grow. Like we were wrong, right? And it deserves to trade at a higher PE ratio. All right. Anyway, going back to the charts, one last chart that I want to show you guys And that is just a comparison of the PE ratios, right, of other companies that are similar, arguably, to Adobe. And so here I have Microsoft, CRM or Salesforce, Google, and Adobe, right? So all I'm trying to do here is just say, hey, these are what companies similar to Adobe are trading at based off a forward PE ratio or valuation, right? And so again, I mean, obviously there's no surprise here. Adobe is trading at the absolute lowest forward PE ratio of 15, right? Where the next lowest is CRM, which is actually going through a slump right now as well. And you can see, I mean, this company was trading at a 70 PE ratio at one point. I mean, that's, maybe for another video, but that's a good buying opportunity in my opinion as well. But even with the downturn that Salesforce has seen, it's still trading at a higher PE ratio. And then you have obviously Google, which we just went over. You can see where it was also close to this low level, and then it's ripped up, right? So again, I mean, that's just a prime example of what a stock price can do when the narrative changes on that stock, right? Google has been making a ton of money. It just took a while for the market to realize, like, okay, you win. You're a good company. All right, so and then obviously you have Microsoft, right? It's just been on a tear, but you can see, I mean, it typically trades at about 30, right? So, I mean, there's no reason why Adobe should not be trading at least like a 20 to a 25 forward PE ratio, in my opinion, somewhere around this average. And it's just not, right? The market's just beating the stock up. And, kind of for the reasons that I told you about, it's just the fear that AI is going to actually hurt the company instead of help the company. So I hope you guys found this video helpful. That's all I have for you guys in this one. Again, in my opinion, I feel Adobe is a great buying opportunity right now on the dip. It's just a good value stock. I mean, I'm not saying this stock's going to be a huge growth stock, not that it can't be, but it's just the fact that where it's trading at right now. I mean, it's just, I mean, look, as I mentioned, I mean, look at the revenues, right? Nothing but up. And then look at the stock price, and it's nothing but down. I mean, it's just like, it doesn't make, any sense to me, but there's plenty of times where things don't make sense, right? Where stocks are trading at super high evaluations and they keep going up, or vice versa. Like this, stocks are trading at super low evaluations and they keep going down. Again, it's just a matter of time before the market realizes that, wow, maybe we were wrong about Adobe. And honestly, even in a bear case for Adobe at the prices that it's trading at now, in my opinion, this is not financial advice, I still think it's a good buy. And Adobe would only have to grow revenues by like 8 to 10%. Like it wouldn't even have to do anything crazy. Just do what it's been doing. And it's still a good buy. So again, I hope you guys found this video helpful. Please, if you're still here and you don't mind, like this video. It really helps the channel out. I'm trying to grow this super small channel into something bigger eventually. And then obviously, if you would like, subscribe. That helps even more. But I'll see you guys in the next one.